I'm Lon Shaver, president of Silvercorp Metals. We're an established silver producer that has been in production, generating profits since 2006 from our mines in China. Recently, we've embarked on a new venture and acquired a permitted project that we're currently in construction building in Ecuador called El Domo, which should come on stream at the end of 2026. As a company, we think we represent a great growth in terms of silver and other metals and an excellent value opportunity.
Hello, my name is Michael Konnert. I am the founder, CEO, and president of Vizsla Silver. And Vizsla Silver is developing the Copala Panuco project in Sinaloa, Mexico. We have an incredible district that we've consolidated for the very first time in modern history. We're driving that forward into production with a target of first silver in 2027. Currently, focus for 2025 is our test mine that's progressing so far. We're recently underground at the test mine. We've made a new discovery at the Animus vein, and we're embarking on publishing our feasibility study later this year, followed by project finance. So we're driving the project very fast towards production in 2027.
Right. Okay. We got two CEOs and two companies top of the game at the moment, and we're here to kind of test the silver thesis and see if it still holds true. So, silver market has experienced structural deficits in recent years. I mean, you guys have been talking about it. Do you think these deficits will continue through 2025 and beyond, Lon?
Yeah, I do. I think that it's hard to get any kind of mine permitted and in operation anywhere in the world. And it's a new mine supply that's really going to fill the gap that we're seeing.
Yeah, it's incredible. It's a structural deficit here in the fifth year, so the fifth consecutive year of supply deficit. And new mines coming online aren't going to fill that gap very rapidly because there simply aren't very many silver primary mines, and it's hard to ratchet up byproduct production to satisfy that deficit. So it's an incredible setup for silver, I think, going into the end of the decade.
So what he seems to be suggesting is kind of silver supply crunch coming from primary mines and the kind of secondary market, Lon, is that right?
Yeah. I think, as Mike commented, you can get supply from primary and from secondary, and it's not easy getting any mines built. Well, first you have to find them, determine that they're economically viable, get them permitted, fund them, and build them. And that's not an easy task for anywhere and for anyone these days.
So Lon, just sticking with you for a second, I mean, what's the hard bit? Finding a source of silver, financing it, or building it, or operating it?
Well, I think you're asking me to pick amongst three challenging things. Obviously, there's in terms of world-class assets in the silver space, there's not many out there. And we'll probably talk about this a bit later in terms of the shrinking sector in terms of companies and sort of what's available to provide growth in the silver space, as many silver companies have been moving into gold and other commodities. But it's hard to find them, and just given the challenges these days with communities and with government and permitting. That is a real hurdle to moving projects ahead, and then never mind like what's the actual cost to put the capital equipment, get the project built. These costs have generally seen pretty steep escalation in most parts of the world.
Yeah, we've been running a Mine Builder series recently, and it's kind of quite clear that it ain't as easy as it looks, let alone operating it. So like Mike, you've kind of found one of the better pure play silver projects in Mexico. You're going through the phases yourself. Exploration, you've been able to throw a lot of money at it. You're building up something of decent size, decent grades. And how do you kind of view moving forward with your business? You understand the difficulties that maybe Lon is outlining, I'm sure.
Absolutely. I think if you model the cost inflation for miners, it's about a 8% annual, cost inflation going back over history. So it is a challenge, something you have to monitor. But fortunately, we've seen some movement in the silver price to help offset that. But it's definitely a challenge, and it's compounded by tariffs and other pressures that are completely out of our control.
Right, but how do you view the kind of the investment landscape out there at the moment? Because the tough thing about sort of the exploration development phase is you need to raise money to kind of grow the company, to do the things that you want to do, to be able to eventually build it. When you're talking to investors, are they buying into the industrial usage more than the, I guess, monetary asset value? I mean, what's the key selling point for you?
I think it's when we speak to investors, it's looking at it like there's two ways to win. I think gold has started to really capture people's imagination here. I was just recently last week in the U.S. talking to a mixture of, I guess you could refer to them as somewhat specialist in mining, but also a mixture of generalists that don't necessarily focus on mining day to day. And with the recent moves in gold, and I think it's somewhat general knowledge that once gold has its move, typically silver follows in a lagged position behind gold, and then tends to outpace the price of gold in terms of percentage movement. So a lot of investors that have perhaps followed on the sideline gold and the price movements with gold have started to look at silver as the next metal to move, and so we're starting to see, I think, an increased and renewed interest in silver, and in part silver equities. When we talk to them about what makes silver so special, that industrial application is a big part of that. And I think it's easy for investors to wrap their minds around that solar panel growth in China really leading the industrial growth in terms of demand for silver, and the implications in a very tight market between supply and demand here.
Right, but what about the kind of slight disconnect between, I guess, silver price at the moment and equities, and this kind of future demand that you're talking about? Again, how does that affect your ability to access cash, the cost of that capital, or is the market forward-looking when it comes to projects like yours?
Well, there's a combination of that. There's forward-looking. There's I think a look towards our cash flow, which is immense in the first 2 years. It's well north of $250 million free cash flow after tax, according to our PEA, and of course that's going to grow as we go into the feasibility with the updated mine plan. So there is a keen interest in the cash flow profile of Vizsla. It could be any metal or any product. It's just when you have a capex that's paid off in less than a year at these prices, it's less than 6 months. I think that's an incredible scenario to be in. So you have people looking at just the financial metrics, the basis of our project, and how that's going to look going into production. But also there's kind of the macro interest as well too, that I think gold has really started to kick off that renewed interest from let's say generalist investors in our space. So we're starting to see that. It helps us access a lower cost of capital, of course. You have an incremental buyer in the stock, which is helpful, but also a larger pool of investors to look to. And I think even to note on that, Lon, looking at Silvercorp and the convertible, that was very high demand, and we met with a number of investors last week that talked about that as well too. So to me it seems like there's a broadening group of investors that want to have a piece of the silver space here.
Right, and Lon, I mean, just talk about that, because you're a producer. You've just picked up another asset in build mode at the moment. How have you had to adjust your kind of corporate strategy in the last 2 years to kind of reflect the market conditions, geographic conditions, and basically what the silver price has been doing for you?
Well, I mean, I think it's a constant state of readjustment in terms of strategy. We've obviously taken a shot at a few different growth targets, over the years, and we finally landed one. And so we're happily building a mine, and hopefully leading into a second mine in Ecuador, which is now emerging as a good jurisdiction for mining, given some of the other recent deals and money that's gone into the country. But I think we've been pretty consistent, which is focus on optimizing the profitability and the long-term viability of our existing assets. And so we've been making investments in that, and that's certainly bearing fruit. And then continuing to look at other opportunities around the world for growth. And coming back to the convertible, I mean, what the objective of doing that convertible was expand our investor base for sure, but also pull in some growth capital that can be focused on maybe a different type of asset than what we were looking at previously. If we look at sort of the typical deals with developers, like the deal we did with Adventus, that's a lot of stock. There's a rollover. People who own the developer are happy to take a re-rate and a bump on shares of the acquirer, and then maybe stick around for a further re-rate. But some of the other assets that we want to look at are existing production, and the people who are the senior companies that are selling some of these bigger existing mines are looking at taking paper. So we did that convert to give us currency to run around and to be a legitimate player in looking at some of these assets that we think are going to come available here.
Right. Okay. And Jamie, kind of sticking with, I guess, investor sentiment, in terms of kind of geopolitical tensions, right? We're all aware of what's been going on, lots of and new things like the tariffs as well. How has investor sentiment shifted between physical equities and silver-backed ETFs? Do you think, Mike? I mean, you're probably a bit closer to that.
Yeah, I think the ETFs have really captured a lot of capital, and it's an easy way for broader investor group to access the space, and of course, but the returns are muted when compared to some of the top tier single company equities, like Vizsla or others. So, I think it's important because it's all part of the ecosystem that we live in. The ETFs buy our stocks. It creates at some points indiscriminate buying in the stock, which can be very good for investors who are in before those additions to these ETFs. So it's it's all part of it, but I think it draws people into the space, and then those people look for outsized returns in equities, single company equities. So they then go down and do the process of due diligence and look at videos like this and research these companies. So we are competing against ETFs certainly, but they also play a very important part of this industry, and there are dozens and dozens of very strong investors in this space that still do look at buying, these specific companies. And I think it makes it a little harder. We do have to compete more for the capital, and but I think what we start to see is the better companies receive the majority of that capital. And of course, the problem can be later when a lot of money flows into the space. A lot of companies that probably don't need to be raising money or don't have a viable project will be able to access that capital, and then it kind of destroys returns as a whole over the whole industry, and it kind of scares people away again. But that's kind of the cycle of metal prices and how it relates to equities.
Right. And what about obviously, I want to sort of come back to something we talked about earlier, which is around the role of silver. We're sort of seeing some global debt levels rising, increased bank buying of gold. Is silver going to be able to take advantage of that? Is silver equivalent thesis taking shape? Do you think? I mean, Lon, maybe one for you, because I don't know where you sell into. Do you sell into China?
Yeah, I mean, all our silver is produced in concentrates that are sold domestically within China to smelters. So they take our product, we get paid for the contained metal value. They process it, and it goes into the supply chain, ends up in solar panels or bars or jewelry or whatever. So I mean, is it a kind of safe haven asset class in the making? I'd say yes, it is, and for us, it's further downstream, like where that happens. It's not, we're not selling silver to silver hungry investors who are stacking it and putting it aside, but it's added into the supply chain and is made available for that. But I think the answer to your question is I think yes. There's not really anything that we've seen that's shown sort of a deterioration in sentiment towards silver being that store of value and representing what it always has. And Mike touched on it earlier. Obviously gold higher priced has had the move. Silver, here is sort of dealing with 30 is kind of the new normal. Some recent reports have talked about that. I think that's kind of true. There's a sentiment here that we've got support here in the silver pricing. And I think there's great potential for silver to play catch up to the moves that we've seen in gold. And then at some point, seeing that, positive silver pricing trickle into the equities.
But does the Chinese or Asian market behave any differently, say than the North American market when it comes to silver?
No, I think it's similar in the sense that obviously, gold is obviously the preferred precious metal. You don't have to buy a room full of it to store as much value, given its value on a relative basis per ounce. But silver also has that allure. There's also a cultural affinity to silver. The Chinese, currency really began, with using silver as a currency. Jewelry and everything as well is certainly a part of the culture. Just anecdotally, when this silver market was picking up, we went on one of our site visits to one of our smelter customers and asked to see if there was sort of a gift shop so we could have a look and see if we could bring back some souvenirs. And they had quite an elaborate shop full of jewelry, bars, all kinds of things. And, we spent some time, we all spent some money. And then what we heard anecdotally a couple months afterwards, because of the sort of this renewed sentiment towards silver and gold, the entire shop was emptied. So all the supply, all the items that were for sale in terms of, and they had, literally cabinets and cabinets of different types of bracelets and necklaces and rings and stuff. And it was all gone. It was empty. So when the market woke up to the fact that this was coming and this demand for gold and silver was there, the Chinese consumer went out and acted with their dollars.
Well, I wonder how it would behave in a kind of stagflationary scenario or a disinflationary recessionary environment. Do you have any thoughts on that, actually?
I think the thing is there's whether you call it gold fever or just being appreciate artwork. There's something alluring about gold and silver that when you have it, it's not like you're in a rush to sell it.
And to add to that, it appears I think this year we're supposed to see about a 7% increase in investment demand for silver, and I think the market's starting, as you say, Lon, starting to pick up for that and starting to speak. And I think that is real related to certainly to the movement in gold, but also renewed fears of inflation and other issues globally. We've seen it in the past with silver. Silver performed extremely well during 2020, that issue there, and its historic crises or inflationary periods. And so I think, depending on what happens here, but, global tariffs can often be inflationary, could also add to the investment demand of silver. One of the big knocks against silver, of course, is that you don't have the central bank buying. But of course, the market's much smaller than gold. So any increase in, let's call it consumer or retail investment demand or other demand, hedge funds and family offices and things like that, they can have a very material impact on the price of silver.
Right. And so we're talking about sort of geopolitical tensions and we're talking about, geographical behavior, et cetera. I mean, Mike, you've seen that in Mexico recently. We've talked about Claudia Sheinbaum coming in, and I know obviously recent elections in Ecuador as well. So, Lon, you probably have something to say here, but are you guys sensing any kind of policy changes in major producing regions that you operate in because of all these geopolitical tensions? I mean, Mike, let's start with you.
Yeah, it's positive. I think when your major trading partner starts to get a bit hostile, you start looking at home and seeing what you can do to boost your economy and create jobs and fill in the gap where otherwise you started to lose out because of these tariffs or argumentative policies or so for us we've started to see an improved level of interest in terms of permitting mines in Mexico, in terms of being positive towards job generating activities like what we're doing here. We employ 300 people now. The mine is going to have an impact of probably close to 1,000 new jobs within the region as we move into production, direct and indirect. So something like that's taken more seriously than it was perhaps a couple of years ago, when it was a more stable trading relationship with the United States. So that's not only Mexico, of course, Canada is starting to see that too, where we're realizing we need to permit our natural resource projects in Canada. So I think that, it's caused chaos, but for us in the, call it the development or pre-production permitting phase of the mining industry, these tariffs can be seen as a positive in the sense that it really encourages countries to think about their own internal industry.
Right, and obviously Daniel Noboa is back in, re-elected just in Ecuador. Lana, it's early days, and I guess learning the political landscape. But what are you seeing? How are you reading it?
Well, I think I would read it as a positive. That said, his opponent wasn't anti-mining. Mining wasn't sort of part of the discourse here in terms of politics. And I think the forces that have begun and started to be unleashed in Ecuador to grow a commercial scale mining industry are there. And I don't think that there's going to be any going back. It doesn't mean it's going to mean that everything gets permanent and smooth sailing, but I think there's sort of a general consensus that why does Ecuador, which is endowed with some wonderful deposits, only have currently two commercial scale mines, and we're looking to build the third in the country. We hope we have the fourth, but there's some others now that are also hopefully moving ahead here. And I think the government and the country is realizing that proper mining, done sustainably, can be a great contributor to the economy and help address some of those other sort of social and economic factors that they, like many other governments, are facing or are going to be facing here.
So, like, a phrase I don't see much and hear much about, and it's not talked about much, is ESG mandates. So is that because the companies have got better at dealing with it, or because that marketing spin has gone somewhere else, or this is ultimately about social and political approvals? How do you read it? I mean, Lon, we'll stick with you with Ecuador, I guess, if you don't mind.
Well, I mean, I think there's a few things at play. One is, what do people, when you're worried about other pressing matters, where do you put your priorities? So I think the topic has, faded a little bit in terms of front of mind when we're dealing with some of these other bigger, political and economic issues that, the world is facing. I think on the other hand, the industry has, and just speaking, for ourselves, we've been a sustainable operator, but what we didn't do so well up until about 2020 was communicate what it is that we were doing and being in that dialogue. And so I think now we're doing a better job communicating what it is that we're doing on the ESG front. And we're also, listening. We have an ear to the ground in terms of what are those topics. And it's not a case of sort of following which way the wind blows, but some of these topics, some of these issues are definitely important things to think about long term. And so when you are in a dialogue with the investment community and the agencies about hearing these things, it's important to have kind of the feedback loop to feed back in the organization and say, hey, people are talking about this. What are we doing on this? Can we do more on this? And then you start to find out that, well, yeah, we can do more and we will. All right, well, let's put that plan in place. Let's advertise that plan, stick to it, report on it. So I think, I can't speak, broadly, but I think for us, as we've been doing this over the years, our ratings have been going up year after year, and our risk profile has been going down, because of these factors. And, you'll always have, naysayers and, anti-mining NGOs that try to paint a distorted picture of mining, and we'll have that anywhere. Mike's going to face that in Mexico, despite the Mexican, mining culture. There'll be people that will show up and will say that this project's going to do this, this, or this. And you've got to be armed and ready with the information to say, no, the science says no, this is what we're going to do. We're not going to do that. This won't be a factor. And, here are the benefits that we're going to be bringing to the community. And it's a lot of hard work. You literally have to sort of hire and enlist a team to be focused on this, because it's a sort of 24/7 type job to be in that kind of conversation with the communities.
Yeah, the ESG is funny because it has higher profile depending on what's going on around the world at the time. But really, what ESG is just good business. It's well-run companies do these activities. We've always approached from day one at Vizsla, before we even had a rig turning, coming at it from a position of we're going to be part of this community. Someone was in my community here wanting to tear down one of the local mountains in Vancouver and build a mine. You would want them to come from a place of basically putting yourselves in their shoes, right? So that's how we've always approached the community. That's how we've always approached the environmental around our project. And we really genuinely want to leave this area better than how we found it, and really contribute to the communities. And in terms of governance, running the company with best practices makes sense. So it's things, as Lon said, these are things that probably all or most mining companies, certainly Canadian mining companies, have been doing for a long time. We just didn't do a great job of explaining them to the public or the market. And so, it's something that despite investor importance, I think that the level that, perhaps even specifically European investors place on ESG is starting to decline in the Trump era. You're not seeing equator principles as important as they were in the past for project finance and those types of things. But regardless of, I think, what the investor sentiment is, I think it's important to have ESG, basically just running your company, your environmental and your social, in a competent and business forward way. And I think that's what we're doing at Vizsla.
So given what you both said, then, do you think then that attracting generalist capital back into the space is going to be easier? Because the companies, from what you're saying, the companies seem to be better at doing these things. So, there'll be headwinds, sure, but is it easier to have a conversation with a generalist now as a result? I mean, Mike, do you want to go with that one?
Yeah, I would say so. I think it's always easier when the S&P or the tech sectors are down too. So, when the speculation in those industries starting to come off a little bit. But mining, it's seen as an old-fashioned industry as well. It's not as exciting, perhaps doesn't have in some cases the same multiples that you can capture in say tech investing and others. So generalists, I think, are often come at it from maybe a uninformed point of view on mining, and they're really not that interested in learning about 43 101s or measured and indicated resource categories or things like that. But what they are interested in is how it makes money, profitability, and the growth case for the metal. So I think if we explain it to generalists in that context, it's an attractive investment opportunity. I think under this Trump administration and with China, investors seem to be more willing to look at mining because it's more about metal security and national security and those types of things, which has become a theme. You're starting to see a lot of interest in domestic mining in the United States. So the theme, I think, is shifting. The narrative is shifting further to suit our companies, the public mining equities. But that's also bolstered by gold being all-time highs and people starting to talk about that on CNBC and in the public realm these days. So I think it's probably a combination of things that I suspect that it could create a perfect storm for our sector and interest in these equities.
Yeah, and I think obviously size and scale helps, and obviously long for you've been throwing out cash out of China. Things going well there. But it's the new project that kind of, I guess, added a little bit of spice to this. So can you give us an update on the construction activities at El Domo? Is there a kind of critical path items schedule that we need to know about?
Yeah, not so much critical path, but I mean, we've got a plan and a pathway to getting, commissioning in December of 2026. We've got the project construction broken into a number of bid packages. One we've already signed, and so we have a contractor who's been active on site sort of since December, January. Most of it's been very preliminary work through what's a difficult rainy season, but now things are expected to ramp up here in the coming months pretty dramatically. We just recently put out some numbers to basically fix the budgets related to the construction and largely tied to what was in the original feasibility study that we inherited. And so with those numbers now, we're prepared to speak to what it's going to cost us over the next 2 years, really, to get this less than 2 years to get this built.
Right. What about the transition from construction through to operations in terms of the workforce and training and so forth? Is that started?
Well, it's a little early for that. In terms of transitioning, I think it's also important. We're going to be running with a contractor from a mining standpoint, and then this is not a huge enterprise. Like it's a fairly high grade, low tonnage for an open pit. So we're not talking about this being a huge footprint, huge army in terms of what's needed on site.
Okay. And Mike, for you guys, obviously, I think you just said that everyone's sort of back at site and getting on with things. So, what's the update from you?
Well, it's a big year for us, and we haven't had as many news releases out this year as in past years, but that doesn't mean that we're not very aggressively progressing the project. The test mine has been a success to start here. We finished the portal several months ago, and now we're underground, which to me is incredible to see that, to go from surface drilling for 5 years, 400,000 meters of surface drilling, now to finally being underground at going into Copal. It's spectacular. So we will complete that in 2025. We'll complete our feasibility study by the end of the year, 2025. And being close to that and seeing how Simon and the team is progressing that, it's really exciting to me. We endeavored to make it our business not to go backwards from the PEA into the feasibility study, and I suspect that we'll be able to accomplish that goal there. Again, that the PEA numbers were spectacular. CapEx of $224 million, an NPV at the prices that we published at, which was $26 silver and sub $2,000 gold. The NPV to CapEx ratio was 5 times. Today, it's 7.5 times NPV to CapEx ratio, which is unlike anything I've seen before. Really just incredible. Triple-digit IRR at these prices. Probably less than a 6-month payback. So that's what that's what we published. Since then, we updated the mine plan. That mine plan's going into the feasibility study. The mine plan is going to include material that's higher grade, closer to surface, closer to that test mine. So I'm thrilled to see what that feasibility study comes up with here. And then behind the scenes, of course, we've been working on project finance for about a year, and we've gone from a long list to a short list to an even shorter list now of candidates that we're working with. And I suspect that in conjunction with that feasibility study, we'll be able to put out some positive news on project finance. So I would love to see us at the end of the year on project number 1, having basically fully financed, feasibility study in hand, test mine complete, and, Lord willing, permits, but we don't need those permits. It doesn't affect the critical path till about mid-2026. So we do have some time on the permit front, but we have submitted permits in Mexico, and that's gone very well. Outside of the quest to put project number 1 into production, which would be the world's largest single asset silver primary producer, we're also on the hunt for project number 2, which has gone well so far this year. We put out an announcement out of our Animus vein where we made a very high grade, wide vein discovery there, kind of in between 2 known areas of historic production. So I think that there's a potential that Animus could become the next center of mass for us, or one of the next centers of mass for us. And that to me is very exciting, because I like to think about the growth profile from project number 1 to project number 2 and beyond within our district. And I could keep going, but I think I'll leave it at that.
Explain why you think that's used. Because from a kind of commercial point of view or business planning point of view, it's you're moving into feasibility study, and obviously the numbers look great, but at the same time, conservation of capital is important. You need to spend it on what's essential to kind of get the funding in place. You're talking a kind of growth game at the same time, Cristiano, etc. Why tell investors why that's important to be going after project number two? Are you running before you should be walking instead of running at this point? And if so,
Well,
why?
the comfort. I mean, I have the utmost comfort in Simon. I know you did an interview with him on Crux. So I think if people haven't had a chance to hear about from Simon, he's one of the world's great mine builders, and he's built about 40 mines, more with his career with Ausenco and other projects. The Goro nickel mine that he was in charge of for Inco, and so he's one of these prolific mine builders. So he I think has project number one under control, and that allows us to put some efforts into finding project number two. But really, if you're a mining company that's not filling your reserves, you're shrinking, you're not growing. So now is the time to think about growth. We need to think about our path forward into becoming a very large silver equivalent producer, and I think we can do that through our map. To what we have on our property. So the original property package was about the size of the island of Manhattan. We've tripled that last year. By the end of last year, we tripled it. Now we're sitting over 30,000 hectares in this prolific silver belt that we've consolidated, all from private hands, all from unknown companies, not kind of recycled old juniors or things like that. So, I firmly believe that we're in the right address here. And with the cash flow profile that we have, we can set ourselves up to grow organically through exploration and then development of assets within our district. So we'd be crazy not to take advantage of that now and be able to demonstrate this blue sky that we know we have in this district.
Right. And obviously, Lon, you've been through it once before, probably more than that actually. With El Domo, what do you kind of see as the kind of red flags for you going forward? What's the thing that you've said to your team? Let's keep an eye on this, keep in control.
There's nothing really specific that jumps out. And like I said, it's a pretty straightforward build, but I do think the key thing, and we touched on this, is just making sure that you're staying in touch with the local community, and that they understand what it is that you're doing. There's communication back and forth, and there's an understanding of what their involvement can be in the project going forward. I think that's the real key thing. The technical aspect, you're always going to have some surprises here and there, and then hopefully, as an accomplished team, you can deal with those surprises. We think we've figured out what we need to tackle, but I think the core focus has to be on the community as we're building.
Right. And Michael, just finish off. You both got kind of similar kind of profiles for me in the sense that it's kind of solid, conservative, fundamentals driven business plans, not trying attention seeking without anything to kind of back it up. What for you, Michael? What's the kind of the important thing that's been sort of driving your business, your kind of thesis along, and why would you encourage people to kind of look at your company versus, as you say, all the other kind of maybe rehashed older silver stories in Mexico?
Well, I think we have a combination of fundamental value in project number one, and then a huge untapped potential for growth and exploration success, searching for project number two. And to me, I'm an investor in the space. I've been involved in the space for 15 years. And I can't put my finger on any other company that's ever really had this combination in the silver space in Mexico or other jurisdictions. So we've seen these types of production profiles, silver primary, but precious metals combination get rewarded with high valuations, and then takeovers like Silvercrest and Gatos in the last 12 months. And just by accomplishing what we set out this year, which of course we're well funded for, you can see basically a doubling in the NAV multiple based on historic precedents. So, there's a very clear path to re-rating that I believe by doing the things that we have underway right now that we're fully funded for, And that doesn't even take into account the potential for new discovery and new growth through exploration. So I think Vizsla Silver is unlike anything else out there, unlike anything else out there in the silver space. And I think that's why investors should look at us.
Okay. And Lon, I'll let you say the final words. Why do you believe people should be looking at your company?
Well, I think we've proven execution capability, and so you look and you see what we've done in terms of growing our production profile, managing our costs, and then now that we're in a more favorable pricing market, we're showing that we can move the top line growth from production and pricing increases to bottom line earnings and cash flow. So we're doing that, and we still have plans to grow in China, and this will be maybe not transformative, but it'll be evolutionary growth that we can manage. That's going to make us bigger than in a couple of years than where we are right now. So we're delivering on that right now, and then at the same time, we've shown that we can make moves outside, and obviously we've got to deliver on project number 1 in Ecuador and maybe project number 2. But stay tuned. We're still looking at other ideas that we think can fold into the story, and continue that growth and continue that delivering that profitability to shareholders.
Okay, well, folks, everyone listening to this, watching this, reading about it, Lon Shaver, Silvercorp, thank you very much. Michael Konnert of Vizsla Silver, thank you very much. Two companies that encourage you to look at well-run, sensible, and maybe a little step change will happen along the way. We'll see you again, folks. Bye.
Thank you. Bye-bye.
Thank you.